So I'm here with William Hodges. He is a homeowner in, that's you, Will,
I don't know where I'm at. I'm somewhere in the Arctic Circle
Wichita Falls.
playing
And
strip poker.
yeah, Wichita Falls. And we're just sitting here talking about how many homes, like, are you seeing a lot of homes for sale around your neighborhood right now? Or people complaining about?
Actually, yeah, it's crazy. There is 7 homes for sale right now that weren't on the market this time last year. Some of it is from unfortunate, but some of it's just people moving in and out, I guess. I don't know. It's just timing, but we've got an influx and they are not moving. Like, there's no homes selling, but there's a lot for sale, a couple for rent. So we have more vacancies now than we've had in quite some time.
Did Wichita Falls get a big spike of people after COVID that wanted to move out to the middle of nowhere and kind of, not that it's nowhere, but it's a smaller town. No, it's outside of a major city and it's more rural, right?
Yeah, it's 150,000 people. It's not huge. Yeah, huge influx. Prices spiked up about 30, 40%, over the last since COVID era times. And they've kind of flattened out and started to decrease a little bit here. They're probably down a good 10% this year,
Okay.
but still higher than they've been for a long time. But we don't have a problem with housing shortage for now, which we did at first, and it's kind of leveled off. The remote worker thing's the biggest deal, man. The back office stuff has had a major impact. A lot of people left to go back to Dallas or wherever else they came from.
When big companies said come back to the office, or even as companies said come back to the office. It's
Yep.
interesting. I found an article today on AP. I was going to talk about with our guest tomorrow. We're going to have a special guest with a top realtor here in the Denver market. I was going to share my screen. Let me just see if I can do that with you real quick because I think you guys might find this interesting out there. So this was on the Associated Press today. This is actually investors snap up growing share of U.S. homes as traditional buyers struggle to afford one. This is today, right? Obviously July 9th. That's when we're chatting here. Give this article a read, or I can speed read it for you guys. Real estate investors snapping up a bigger share of U.S. homes on the market as rising prices and stubbornly high borrowing costs freeze out many other would-be home buyers. Nearly 27% of all homes sold in the first 3 months of the year were bought by investors, the highest share in at least 5 years, according to a report by real estate data provider Batch. I don't have to read this whole article. You guys can all find that on AP News. It's on today. It was one of the front page articles linked to it. But I think it's interesting that we talk about this kind of thing because what's the value of best fit real estate? We're trying to help buyers understand and help sellers understand that their shortest route to a successful transaction, finding the home of their dreams or selling their home, is the expert advice of an actual realtor, which I'm not. A real estate agent in Arizona. It's my job to refer people to my customers, our customers, to what's the best agent for them. And right now, you're competing with investors. You're competing with lower brokerage commission listings. Don't underestimate the value of someone who is knowledgeable, trained, and is an actual realtor, which means they are licensed in that particular DMA and they are with a board in that DMA and they have access to things that nobody else has. And I think that's some of the value that we want to talk about on this show. And what do you think, Will?
Yeah, I mean, absolutely. I'm hearing over and over on social media, especially like TikTok and influencers there around real estate. If you don't have like the best realtor selling your home right now, you're not selling your home. If you're not selling it for what you want to get it for, that's for sure. And if you're buying a home, it is kind of a buyer's market right now. You can make some more additional demands you couldn't make before. I don't think sellers have completely caught on to that yet. I hear from a lot of frustrated realtors that they really just they have a ton of frustration with their sellers because they want pandemic pricing. They want a blind bid system. They want all these things that are they're just not reasonable anymore. The market is just going, and not all markets, but I think this is all. You can say a lot in different markets. There's definitely different rules, but generally there's just a glut of inventory available that's spiking up. You know, People are having to come off their ask. They're having to throw in closing costs. They're having to throw in agent fees. That's just, I think that's the near future for right now. even though interest rates are kind of high, you're probably going to be a good time to buy right now, even though if you get a little bit of a break in interest rates here pretty soon, that might be a little bit better, but it's not going to get remarkably better.
Yeah. And then obviously you can refinance later, right? If you get something now.
Yeah, exactly. 2, 3 years if it really drops and things get down to where they were before, which I don't know about you, Jay, but I got in when the bottom was definitely there. I think we're a 198. And there's a lot of people like me that just aren't going to sell their property, no matter if they want to move or, going from a under 2% to over what, probably 7 or 8 now. I don't see how many people are going to make that decision to go and do that. But, I know for me it's a big deciding factor. Like that's a huge jump in interest and especially with the pricing being higher. So there's got to be something that gives in that equation for people like me to open up their inventory and want to sell. But if the interest rates don't come down, there'll be no buyers. So yeah, I think what buyers aren't realizing that interest rates, as bad as they sound, if you can afford it, you get in, you spend a few years, you wait for the market to calm down, you spend a little bit extra money to refi it, and you're basically just buying that rate down. And that's a solution to get in the home you want today. Because I don't know about you, I know there's going to be a housing correction, but Jay, do you think there's going to be a correction that's meaningful in the long run? Like, really, are we going back to prices 10 years ago?
No, I don't think we're ever going back to prices 10 years ago. I think what we're looking at right now is a correction market where we're finally seeing some stabilized listings that are on the market for more than a day. For example, we bought our house here in Denver. It was an open house for 4 hours. They sold it to us. It's a long story how we got this house, but it was sold in 4 hours. Now, my neighbor, great house, super clean, relatively updated. I don't want to say it was like the most updated house on the block, but they went with a discount brokerage. They went with a company called Redfin, which everybody out there I'm sure has heard of. Maybe we can say that. Maybe we can't. Maybe you have to edit this out later. But a major brokerage, right? And they offered discounted commissions. Well, the problem was they had already bought their house in Texas. They were moving to Frisco. That house sat on the market for about 2 or 3 weeks until they did a price change and lowered it by about $20 or $30. A savvy realtor would come in and hit them with that truth up front and let them know what it would sell at in this condition right now and offer solutions like staging, open houses, whatever the case is. Cassie is going to talk about that tomorrow, I'm sure. But to save 1% or 2% on commission, they wasted 3 weeks of having that house sold and ended up discounting it so much because they probably panicked that they weren't going to sell. So they had to drop the price so much in order to get it moved. And I think we're going to be talking a lot about that here. Like, what's the real value that a licensed realtor brings to your game, brings to the game? And we're going to talk a lot about that, Yeah.
Yeah, no, I'm excited to hear what she has to say from somebody who's I'm a aficionado and I'm in it as a researcher and especially coming from the home improvement space, fixer uppers is a big part of selling a home. So I'm in it a lot and I watch a lot of influencers that talk about it, a lot of realtors, a lot of speculators, a lot of investors. I have to say the investor part is the least interesting part of real estate TikTok.
Yeah.
Those parasites. I mean, find individuals who love to invest in real estate.
But they're complicating the market right now. They're out there.
Yes.
That's what this whole article is about. It's a great read. It's a less than 5 minute read, but you have to compete with these investors who are scooping up the houses. So you've got difficult interest rates, a market that's right now there's listings are sitting, so it's getting a little bit saturated is the wrong word, but it's not the market that it was a year ago or 2 years ago. And in a year, it won't be this market. It's constantly evolving. Like in 6 months, everything we're talking about right now will probably be completely different, borderline irrelevant.
Yep. It definitely could be. I think there's a huge opportunity for that to happen. Volatility is kind of the word of the day. But, I think if you need to move and you need to sell, you can sell.
Yes.
You can.
Yes.
And honestly, if you bought more than 5 years ago, you're probably way up anyway. Even if you have to come down from your dream price, it's okay to sell right now. The problem is when you go to buy, yeah, you're going to have a higher interest rate. I think we've talked about that. It's workable, but you're probably going to buy in. You might see a little bit of a price drop, you know, maybe through the end of the year, but we're not talking about 50%. We're not going back to 2015.
No. And what are
That's
you going
that's
to buy
gone.
when you sell your house? Are you going to move to a comparable market? If not, if you're going to move to a comparable market, you're not going to have a big pile of money. If you sell your house in Denver and want to move maybe to a smaller market like Wichita Falls, that $800,000 sale is going to go a long way in Wichita Falls. But if you move to Dallas, guess what? That's the going rate of most houses in nice neighborhoods in Dallas and Frisco and Plano and Allen and all those towns that we know really well, right? All around North Dallas and all throughout the nice areas. So, what are you going to get if you do sell your property?
Right. That's a really big key. You better have some cash in your hand, or your mortgage paid down enough to help fund that other thing. And a lot of people are having to choose. I did notice that a lot of people are choosing to sell their home first, get the money, live in a temporary house, a rental until they can buy and with the
Very
cash in
common.
hand.
Very common.
Yeah, it's
I don't
it's
know how
really
much.
it's really
Families
hard.
obviously had a lot of savings. They must have had a good amount of savings to buy that house. They had already purchased their house in Frisco, but based on what I saw the price drop was, they probably hit the panic button a little bit.
It's funny. I had this flashback to it was around 2013. I was living in Hermosa Beach when we lived in Hermosa Beach. I think you were living there at that time as well. And my neighbor across the alleyway from us, we were laughing about how this guy was nuts. He had a home, a block from the beach in Hermosa Beach, and he'd already purchased this really nice big house, and he was going to tear it down, gut it, and rebuild it. And he ended up buying the house next to his. And I don't know if you know anything about Hermosa Beach, down by the beach, it's like really packed in. There's not zero
No,
lot line, no room. So he bought two of them so he could build a pool down by the beach and a slide that went from the second floor because we're on a hill and the pool was like majorly dropped from the first house. So he built a slide to go down there, and we were laughing because I think the one house he had that he did a refurb on was like $3 million to tear it down and rebuild it, and the other house he bought was $7 million to buy and rebuild it, to purchase it and rebuild it. But you look at those prices now and you're like, that's probably together. I haven't looked it up. I need to go back and look it up, but it's probably a 14-15 million dollar
yeah,
home now. You
but
know,
back then that seemed really expensive, and it actually still.
and I think that what I'm trying to get through is like it always seems like it's super expensive now, but in 10, 15, 20 years, it won't. With inflation and everything else, it's just not. Unless something totally breaks and the whole thing breaks apart. But it hasn't really happened. There's always going to be little
I mean, there's
little things here or there.
2007. We all remember 2007, 2008. I don't think that that's going to be happening again anytime soon. The big financial crash and the more,
Well,
obviously, sorry, what's the word I'm looking for? There were a bunch of houses that went on the market. People were scooping up houses with no money down
yeah.
and losing those houses. The short sale market went through the roof. Foreclosures. I don't think we're looking at that again, but I think we are looking at a stabilization. Yeah.
Yeah, I certainly hope not. I have to say, like, reading into some major influencers that are talking about the financial markets, it's not everybody agrees that couldn't happen again. We are definitely back in the range of where that is possible. Defaults are growing, and all the rules that got put into place have been stripped away since that time. And it's just, there's higher speculation than ever. We have a bunch of investors now that own it. And when an investor owns it, different from, let's say an individual, right? You have like one chance. That individual defaults, has a problem with employment. Well, what about an investor that owns 200 houses? When they default and they lose all 200 at once. We haven't seen this level of investor ownership, and I think that article is really important. We haven't seen this level of investor ownership in quite some time. More questions than answers, but what happens if some of these investor groups start to default? We could see something way worse than the financial crisis that happened in 2008.
But does anybody feel bad for the investor groups? I don't.
God no. And I hope they don't want to. But the problem is, it still impacts everybody else. Honestly, I think corporate ownership of housing is a bad idea machine turn up to 100. But
Yeah. Yeah.
the level of greed is impressive. How
I think
people
we could do
can.
a whole show on investors in the market, and I think this is a good teaser for. We're gonna have a lot of shows and a lot of content coming up. We're gonna be doing interviews with realtors and general contractors and people in home services. We're just gonna be bringing a lot of content. So I hope you guys enjoy this. There'll be more to come. So thank you.
Bye, everybody.